Hello, good morning. You're watching the markets in ET now. I'm Anisha Jain. With me is Nikunj Dalmia. And if you look at the screen right now, it's not very pretty. Over the last 2 to 3 days, we have been consolidating. That's been the flavor of the market. 19,700 has been a bit of a hurdle for the markets. If you look at the Wall Street as well, that took a slump yesterday as well. The tech stocks were coming under pressure. To add to that, the Brent crude stays elevated above the mark of $94 per barrel. And even if you look at the overall data in the last few weeks, we have seen that the global markets are considerably off the highs that we had seen earlier. For instance, S&P almost is 5% down the highs that we had seen recently. Ditto can be said for Dow as well as Nasdaq as well. And there have been major drags that has come in actually from the tech stocks, Nikunj. So for now, of course, the Indian markets are lacking trigger, and if you look at the global screen as well, not too pretty.
No, Anisha, I mean, you are certainly in a spot of a turn in terms of the global market setup. The sharp reversal in global markets is something which we cannot ignore for long. I mean, 7% down for Nasdaq, which has been the most performing index, followed by 5% on Dow, I think is something which you cannot really sugarcoat it. So there is a bit of a pushback in terms of the global market. The good bit for us is that we are underperforming in this global market fall. We are not far away from an all-time high. While most of the other major markets are correcting from the 52-week highs, Indian markets frankly are not far away from an all-time high. The mood point locally, I think, is that you may see mild profit booking in small cap stocks and a little bit of adjustment in mid cap stocks. But if global markets are not looking all that charged up, sure, it will have a rundown effect on our markets. We are outperforming this fall, which is good news for us, which is on expected lines. Most of the brokerage reports I've read, they're saying pretty much the same thing, that September was a dull month, but October could be a different month. There are pockets of overvaluation in the market, but in general, the large cap stocks are looking cheap. So the way I see things translating in the short term is that it could be an impact of this global, global headwind, which will take the sheen away from the momentum, which may have an impact on the FNO expiry. But the fact they are outperforming this fall, the fact that the Indian narrative is so strong, that means that the correction, I think, is not going to be deep. It's going to be very shallow. So global markets may be at the jaws of a reversal, but that does not hold true for India.
But just looking at our market texture as well, the fact that we've been in quiet consolidation mode for the past 2 trading sessions, did nothing yesterday. It was at best a very, very narrow band. Yes, the Nifty bank did underperform, and yes, private banks once again took a backseat. Nikunj, I think the question is, as an investor or a trader, do you do anything in the market? I mean, for trading, obviously, you're not getting that swing or momentum either which way, at least at an index level. Yes, individual stocks have been reacting to news flow, but this is not the time to act. You want to wait for the market to take a significant direction or a conclusive direction at that.
So Aisha, you are settled in this range, and I think that range will just bring this point out. While the bias of the range is something which you can argue that is now mildly towards the downside, and the path of the least resistance in the near term 8-10 days really could be on the downside. Frankly, this market is not giving you too much of directional move per se. The missing link for me is that the market, at least the Nifty, is lacking any kind of leadership. Look at that range now. From 22nd August, 21st August, is it August or September? I think it should be September, right? So markets really have been in this kind of a range, which I think is very evident. And I think the best way to navigate in this range is that you will get a directional move either because of what is happening in the global markets or because of the earnings season. Wait for the directional move. While the market will take the time to adjust, you need to be just watchful of mid and small cap stocks rather than chasing them. The stocks which you wanted to buy, some of the stocks will now suddenly be down 5, 10, 15%. And that's the time you want to time your entry point smartly.
Oh, well, yes, that's the time that you want to put an end to the markets. But for now, we have been consolidated. For now, that is the range that we have been tracking. But we're talking about the fact that Indian markets have managed to stand tall and outperform, and that is something which is being acknowledged by a lot of brokerage houses as well. For the longest time, Nomura actually had a neutral call on India. That has now been upgraded to overweight now. They are saying that India is going to be a major beneficiary of China plus one theme. India has a large and liquid equity market, and the recent softness, which has been driven by higher oil prices, is something that could be bought into. In fact, they are saying that yes, weakness might persist in the very immediate term, but valuations are something that might continue to command a premium, and the cyclical slowdown that we are seeing from a high base is expected to kind of reverse very soon. So overall, if you look at the fundamentals of the economy, that's very strong. The growth is one of the fastest in the world. They are talking about how overall the demographics are very positive for India, and even if you look at the policy action and the overall setup ahead of elections as well, Nikunj, it's pretty much a bit of a late call perhaps, but overweight is definitely warranted for India.
See, it may be a late call, but when you come out with calls of changing your stance from market neutral to overweight, you are also cognizant of the underlying valuation. The fact that it's a late call, but it's a late call, it's an obvious call, but it is coming at a time when markets are at reasonably high, which means that Nomura feels that the big picture argument for India, and they've not been very specific about sectors and themes in this report, it clearly means that they find there is a big comfort in terms of the economic setup, comfort in terms of the positioning of the country, and comfort in terms of how they expect institutional appetite to move. Bear in mind, while we can talk about FIs flows being slightly patchy in last couple of days, in general, this has been a comeback year for foreign institutional investors, unlike 2022. So 2023 would be marked at best as a comeback year for investors. And after the recent run-up from the recent low, valuations, if valuations were stretched, then Nomura would have not come out with this report. So to cut a long story short, I guess Nomura is clearly making a point that factors like political election cycle, or what is happening to the oil economy, high inflation, all those factors are unlikely to derail the India growth story.
Okay, that's the take coming in from the house of Nomura. But let's take it across to Kunal and Naresh and find out what the index has been doing. And actually, Kunal, morning, nothing at all. When do we see a conclusive move on the index?
Well, yeah, I think it's been a very sideways over the last 2 days. No meaningful breakdown or breakout for the indices. And I think the only good part which we can probably attribute is that both the indices, the Nifty and the Bank Nifty, have been holding on to their respective medium-term kind of moving averages. 50 DMA for Nifty has been a decent support. That's around 19,555, 575 mark. And for the Bank Nifty, it's very close to 44,000. 300 odd levels where it's trading right now. So, and that's the 100-day moving average for the Bank Nifty. Since it's an expiry week, I think we would also need to look at the data for the rollovers. As of now, what's actually happening is that the current month unwinding is pretty low, but the next month built up for the index futures is pretty much on the higher side. But then the premium for the index futures is not as high as compared to the previous maybe 6, 7, 8, 9 months for the indices. So that indicates that maybe there could be some sort of short built up which is happening, or short rollovers which are taking place for the Bank Nifty specifically for the next expiry. Hopefully by the end of the day tomorrow, we would probably get a better hang of the kind of percentage rollovers which have increased for the Bank Nifty. But that's the stance from short-term traders, where they're trying to position more short open interest towards the next series. So that's the some substance of the market trend, because I would probably expect that if we break below the 90,525 mark, we should cross below the 90,300 levels as well.
Naresh, that's the thing, right? Morning, firstly, that the Nifty Bank, led by the private banking names and the big ones, they're the ones which are not participating.
Absolutely. So the drift has been slowly lower and lower for a lot of these large private banks. So if you look at Kotak Mahindra Bank, it tried to make a one-day move, and we are back to the lows of the last 2 weeks. Then you have HDFC Bank barely making a 10-15 rupees move from the recent lows and just not able to make a larger bounce back. Same is the case with ICICI Bank. So it's been a slow drift, and this is almost 60% of the Bank Nifty. So if a smaller name goes up, does not make a difference to the index as such. So overall, the drift is lower, but what we are seeing is the follow-up action is not very sharp. So when we see such breakdowns happen, we generally see 2, 3, 4 days of continuous sharp falls in a lot of stocks, which is not happening in a lot of this names. So it's more like a slow drift. So we are waiting for some sort of a reversal signal that indicates a short-term bottom is in place and a new range has been formed. But overall, broader markets have been relatively better. They've not seen a slow drift. They've been sideways for the last 3 sessions. So overall, time to be more stock specific, more selective going forward.
Okay, so that's the index call coming right now, just ahead of expiry. But Kunal, what about the stock-specific recommendations?
So I'll go with a defensive name, a rather low beta name. That's NTPC as the first stock, which I'd suggest as a buy. Triangular pattern on the hourly charts, and the breakout is about that 244 mark on the spot level. So would expect a preemptive breakout for NTPC, targets of 255. Stop loss could be kept at 233. And Industar is something which has also managed to give signs of a breakout about that 185 mark. It's managed to close about those levels comfortably. So keep a stop loss of 184 and look out for targets closer to 200.
Okay, so a few defensive bets coming in from Kunal. What about you, Naresh?
A similar defensive bet first starting off with ONGC. Just slowly and steadily moved up after that breakout about 175, 180 and is now close to a new 52-week high, just a couple of rupees away. So the stock has been slowly trending up, could catch momentum going forward. Stop loss at 184, target price of 220. Second is a buy on MCX, which gave a breakout over the 1850, 1820 mark and has closed well above those levels for the last two sessions. Any dips today would be a buying opportunity. Stop loss at 1820, target price of 2100.
Okay, that's the take coming in on individual stocks and what you could trade on. But let's focus on some of the brokerage notes and what are the stocks which are going to be active today fundamentally. And Anisha, interesting note from Jefferies on Aditya Birla Capital. What's the rationale behind their coverage now with a buy?
Oh, well, yes. So they have initiated coverage with a buy, and they say that the company is likely to triple their profits over the next 3 years itself. So that's the kind of big commentary that's coming in from Jefferies. They are saying that the company can capitalize on the wider network that is there. There's a lot of cross-selling opportunity as well that they can tap into, and the NBFC wing can actually gain from the MSME lending opportunity which lies ahead of them. Over the next 3 years, they're expecting an EPS growth of on a compounded basis of almost 29%, and that's expected to lift the ROEs to almost 16%. Even if you look at the life insurance business, they are expecting strong APE growth. The VNB margins are likely to get better, and the valuations per them is also reasonable. Recently, of course, we have seen a slew of fundraisers as well happen at AB Capital. So looks like, Nikunj, this one too is poised to take off now.
See, the stock is not cheap, and the fact that Vishala Mule took over, the stock was at I think 100, 110, and it's gone. It did almost touch 200 rupees, almost 200 rupees. Now, so markets have believed and they've voted for the change, and the stock has gone up. Now the company has to deliver, and turning a big NBFC like Aditya Birla Capital, it's easy and difficult. It's easy because, well, they've got the Birla brand, they have presence in all the big businesses, and they in a sense have a great runway in terms of the way financial sector is moving. It's tough. Why? Because there are some legacy businesses which cannot be turned automatically. The mainstay, I think, will come from the NBFC business because they've got a very large wholesale book there. The cost of borrowing is one of the cheapest. After all, they are a Birla company. Can they really build their retail franchise very well? Can they bring back their AUM in their AMC business again? You know, they've got, they are no longer gaining the kind of market share what they've historically gained. Can they, you know, come back there? The insurance business, can it really go big in terms of scale and size? They're looking at, you know, reorientation of a lot of internal cost is what I understand. So I think for me, this is not like a hope story. This is something which you would say that there is a genuine case for a turnaround. But the stock at 174 has seen a one-way rally. It has been a massive outperformer within the entire, you know, NBFC space. So markets have already voted for, have already endorsed the rate of change well ahead of the real numbers. So now I think the performance in Aditya Birla Capital will not be P expansion. The perception expansion ho gaya. Now it would be the numbers which they would deliver, and that cannot happen in 1 quarter. That will take 2, 3, 4 quarters, at least 2 years before, if they get the strategy right, they will be able to come back up.
But that's not the case with credit card spends, is it? That's seen a significant spike month on month.
Yes, that's been doing quite well. I think the festive season sales and the demand is already trickling in, and that's why we are seeing that the total spends for the industry as a whole grew by almost 2.9% month on month, and that compares to 2.7% which was there in the earlier months. So yes, there has been a pickup in the pace of spends itself. For SBI cards specifically, if you look at the credit card spends, they grew by a solid 5.6% month on month. And if you look at the kind of run rate that was there in July and August, it's much better than what we had seen in the months of April and May as well. If you look at SBI card card, their new additions also were higher this time around, and the spends per card too has been doing well. So it's the case of fresh additions happening. It's also the case of the overall expenditure going up, and that should be auguring well for the likes of SBI card. But Nikunj, recently there was a bit of a leadership change here as well. The stock was sideways for the longest time. Where do you see this one headed?
So, when it went public, it was in the throes of COVID, and it had this wild premium and a wild P multiple because of the premium positioning they had. Post that came the COVID decline. Everyone thought that, okay, there are challenges which will happen largely because of the way how the economy was moving and what happened because of what happened in terms of the retail credit availability. So SBI cards actually went through this hump. And then they managed to come back, and the fact that the market per se, I think, is doing very well. Whether we like it or we don't like it, there are a lot of parallels which are being drawn. With UPI, what will be the relevance of credit? I always say that, look, credit card is that you're buying right now, you're paying later. UPI is something that you buy right now and you're paying right now.
And you get points to buy later.
You get points to buy later for free. Yeah. It's a different instrument. It's a very different instrument. Everyone thought that, okay, a fintech whole thing of buy now pay later, that will eat into credit card business. No, credit card is you are buying right now, you want to spend and you're confident of servicing your debt, but you want to pay it later. And the schemes and what all we get, I think UPI cannot take that over. Yeah. Now coming back to SBI cards, I think it's cheap now. 23, 24 times, 1 year forward, for a franchise value which is growing and for a business which I think has managed to survive the COVID storm. We don't talk about the stock right now, it has done nothing, but I think the second half for SBI cards could be dramatically different from the first half of this year. Look, retail credit is growing, the CIBIL factor is at play, the franchise value is okay, and the drop what we saw in terms of the transaction value, I think that has stabilized.
Okay, that's that on SBI cards as well as AB Capital. Anisha, thanks for flagging off those stocks. We'll take a break, but as we do that, here are from Safir Anand and the stocks that he's got on his list of buys, and of course his recent buys as well.
I have looked at adding some of the banks. I've been buying Jammu and Kashmir Bank from a price of almost 30 rupees, but I've also added it last at about 75 odd rupees. Recently, I've added Punjab National Bank because I do believe that things are going in the right direction there. There's always the risk of market corrections, and therefore there is a margin of safety, and I do not complete my buying at one particular day. I do have no hesitation in sort of averaging up if I believe that the story is doing well. I have bought, I would call them as a medium risk to medium risk buys, which have a very sort of doubtful past when it came to the way they manage their finances. One is a company called Suzlon, where I've bought the stock at maybe 17 or 18 rupees, very close to the QIP price. And the second one, where I'm reading more of the legal developments than the market developments, is Coffee Day, because it appears to me, at least optically from the court readings, that there is a settlement that is going on. Most of the people on the lending side are sort of withdrawing their complaints, and if the current management is able to walk the talk.
Back, still tuned into the market. Let's keep it with more news and updates. And the government has stuck to its borrowing plan for raising about 6.5 lakh crores in the second half of the fiscal year. Let's get in Sumit Chaturvedi, who joins in with all the details of the government's borrowing plan. Sumit?
Well, Finance Ministry has now kept the borrowing plan unchanged in the second half of the current financial year. So 6.55 trillion rupees will be raised through bonds in second half of the year. It's around 42.45% of total borrowing. Well, the total borrowing this financial year is planned at around 15.5 trillion rupees. Now, it will be happening through 20 weekly auctions, and also 50-year bond will be issued to meet life insurance demand. Now, it's important to note that it's a year of overall, we can say that elections year. So there were some speculations that government can go for higher borrowings, and that's what was a bit of concern for bond markets. But it's not happening, and government has kept its borrowing plan unchanged. So it will happen through 20 weekly auctions, and there will be issuing of sovereign green bonds, which is worth 20,000 crore. Well, last year it was around 16,000 crore rupees. So that's the situation of borrowing, and government has kept its second half borrowing planned unchanged, and it will be happening through 20 weekly auctions. And this year, complete overall is the target of 15.5 trillion. In the first half, it was around 8.5 trillion rupees, and the auctions will start in the first week of October, and they will continue through the end of February, and will happen through 20 weekly auction. That's the plan.
Right, Sumit. Thanks very much for those details. In fact, here, here's the word coming in from the Secretary of Department of Economic Affairs, Ajay Seth, as well.
This is being done for the first time, and in our interaction with the market, as all of you are aware, that we, along with RBI, we do interact with the market participants as to what their appetite is, what the need are, and there are several investors who are interested in long-term paper, longer than 40 years, what Government of India was issuing. So this time, that's how we have made a beginning with the 50-year paper. This is again an indication that a very strong confidence in the economy.
All right, moving right on now, SEBI is considering the possibility of introducing the concept of fractional shares in India. Well, ET now has learned from sources that the market regulator may soon hold a consultation with the government on this issue. Let's understand what exactly this means. Ankur, break it down for us.
Yes, sources say that SEBI is likely to have a consultation with government on the issuance of fractional shares. Now, fractional shares is something which is not a complete share but a part of it. Remember, with the companies like MRF or Honeywell Automation, where the share price is so high, sometimes there is complaint by the retail investors particularly that they cannot think of buying a complete share, and hence owning a part of the share could solve their problem, and more participation of retail investors might be there. However, there are several considerations of SEBI on this issue, and we understand that those concerns will be presented to the government as it will impact listed companies, and even the current norms of SEBI Act as well as Companies Act do not permit issuance of fractional shares, and hence a wide consultation is needed on that. So if at all government agrees on the issues, these amendments will be made in the Companies Act as well as SEBI Act. Remember, in the markets like US, the issuance of fractional shares is allowed, but it needs to be seen that how far SEBI can go to present its case on issuance of fractional shares. And also, let us clarify for our viewers, this is not even a first step for going towards fractional shares. This is just a discussion stage with government, and we need to wait and see what happens out of these discussions with government.
Okay, Ankur, we'll leave it at that, and let's shift focus now to the Singapore GRMs, which have actually seen quite a bit of drop, all the way now to $6.7 to a barrel from the earlier 9.3, and they're now at their lowest level since July 19th. How is it going to impact some of the oil sensitives like an MRPL, BP, HP? Somit is here with that explanation. Somit?
Well, all the Indian oil refiners like MRPL, Chennai Petroleum, Indian Oil Corporation, BPCL, HPCL and Reliance Industries would be in focus given the fact that Singapore gross refining margin, which is the Asian benchmark for refining margin, have come down to $6.7 per barrel as against yesterday's rate of around $9.3 per barrel. That's a sharp drop of around 28% compared to the previous closing. Now the margins are lowest since July 19th, but if you compare it with the recent peak that we had seen a month back on August 28th of around $15.4 per barrel, the gross refining margins have come down by around 56%. Now the reason behind this drop was that all the product prices were down on a sequential basis except for propane, and the reason behind that was the higher Chinese exports of refined products, and also because of the fact that Russia had eased the fuel export ban. Because of these two factors, the drop in gross refining margins could have happened overnight. Now, how does it impact the oil refiners in India? Now, generally, a $1 per barrel drop in the gross refining margin lowers MRPL's revenue potential by around 700 crore rupees annually. For Chennai Petro, it impacts their EPS or lowers their EPS by around 30%. For Indian Oil Corporation, BPCL and HPCL, it decreases their earnings potential by around 14 to 16%. And for Reliance Industries, on consolidated basis, it lowers their EPS estimates by around 4 to 5%. So keep an eye out for Indian refiners in trade, given the fact that gross refining margins have slumped by around 27% compared to yesterday's closing.
Thanks very much for putting that into perspective, Somit. Meantime, let's put the spotlight on IT. Morgan Stanley has come out with their latest note on the IT space. They've revised their calls on most of the IT stocks. Let's understand what exactly they have to say with regards to Tech Mahindra, Cyient, HCL Technologies. We've got Anisha here to give us the details. Anisha?
Well, yes, next couple of weeks we'll be talking a lot about IT sector. Tomorrow itself, of course, Accenture will come out with its earnings, and that's going to set the cue for the coming quarter. But what Morgan Stanley is saying is don't pay attention to the coming quarter, because pretty much we all know it's going to be a weak one. The big question is, what are you penciling in for FY25? And that is why they have a narrative which is more positive. They have high target prices all the way around, and it is Cyient which has seen quite a bit of upgrade as well, while Tech Mahindra has seen a bit of a downgrade given the recent run up that we have seen in the stock price. Now, what their thesis really is the FY25 earnings. They are expecting that there could be the possibility of a double-digit EPS growth, and that's what they are banking on. They're talking about the fact that the US economy seems to have bottomed out. They're not expecting it to get any worse from here on. In fact, the hyperscalers revenue growth too has bottomed out. There is an expectation of a rebound in the BFSI spend going forward in the calendar year 24. The announcement of large deal wins that we have seen recently also augurs well and gives you the visibility for FY25. And they are expecting that the order bookings will continue to be strong going forward as well. Additionally, they also see some tailwinds as far as margins are concerned in FY25. The attrition rates are falling, the utilization rates are suboptimal right now, and there is room to improve employee pyramid and operating leverage, and all of this will mean that there's a margin upside as well. Valuations, yes, is very close to the 5-year averages, but do remember that there is an under ownership right now, both by the domestic as well as the foreign institutional investors, and the double-digit EPS growth is not completely factored in, so they do see an upside in terms of valuation as well. Now, within large caps, they like HCL Tech the most, followed by LTI, Mindtree and Infosys. They maintain their equal weight stance on TCS and Emphasis because the valuations are a bit punchy there. They've downgraded Tech Mahindra to underweight, as I pointed out, because the strong outperformance is behind, and now if at all there is more risk to the downside rather than the upside. They've upgraded Cyient to an overweight because of the EPS upgrades. Margins have been resilient, and overall the expectations that the market has with respect to revenue growth is quite muted, so there is that room to surprise, and that's why the upgrade coming in on Cyient.
Yeah, that's the take coming in on Cyient, and IT clearly is in focus. Let's now shift gears and look at what's happening in the primary market. You've got JSW Infra and Updata Services as well, which are going to be closing for subscription today, while Valiant Laboratories IPO is going to open for subscription. In fact, we've got many others, Signature Global, Sai Silk, they're going to be listing on the exchanges. Let me take it across to Sharad. Sharad, quite a bit of excitement in the IPO market.
Well, yes, there is almost 12 SME IPOs and almost 4 main board IPOs getting actually listed this week. And important thing is today the IPO action is shifted to 5 names. Firstly, of course, the IPO subscription is closing for JSW Infra. Roughly they have been subscribed 2.1 times, but there has been a muted response coming in for Updata Services, almost 16% only at the end of the second day. But there are 2 important listings also coming up. First one is Sai Silk. The IPO size is roughly 1201 odd crore rupees and the issue price is 222 rupees. The total subscription was 4.5 times, and it's expected that a muting listed would be there when it comes for Sai Silks. And for Signature Global, the IPO size was 730 crore rupees and the subscription was on the higher side, more than 15 times. IPO price is 385 and it's expected that there would be a premium listing. Lastly, new company coming from Valiant Group, That company is Valiant Laboratories. The IPO is opening, and looking at the price band, it ranges between 133 to 140 rupees. The IPO size, however, is on the smaller side, roughly 152 odd crore rupees. And this company is a proxy play on the paracetamol theme, where they actually supply raw material for this segment.
Lots of action there happening within the primary markets. Sharad, on top of those details, thanks so much for joining in. Sanjeev Bhasin as well with us on the show. Sanjeev, hi there. Good morning. Good to have you on board. So much to chat about. Why don't we start out with your outlook on the entire IT space, given the latest reports coming in from Morgan Stanley? They're talking about, margins and double-digit EPS growth, that overall aiding valuations for the sector, and a very strong outlook by and large for FY25. You agree?
Yeah, good morning. So, Avan, I think the opportunity lay 3 months back when you could get HCL Tech closer to 1100, or maybe we picked it up at 950, or a Tech Mahindra closer to 1050. We are overweight Tech Mahindra and HCL Tech. Persistent has been our star player in the whole basket, but we remain focused on these three stocks. You can add a Coforge because now there is no promoter, and sooner rather than later you could hear some corporate development. But yes, it has a proxy of a tailwind of a weak rupee. And I think that most of the headwinds regarding bonds and others are getting slowly priced in. You cannot have bond yields at this rate and stocks where they are. So the markets are actually pricing in that the Fed will turn dovish faster than you thought. And I think the bark is always worse than the bite. So yes, we are overweight HCL Tech, Tech Mahindra, and Persistent. We've added Coforge in this decline.
All right, fair enough. That's a view coming in on the entire IT space. What about all the action in the primary space then, in the primary markets, Sanjeev? Day after day, there's one new listing after another. Is there anything that's caught your eye?
I won't be able to comment on that, Avan, because our secondary market team has a disclosure on some of the IPOs as a part of that. So I won't be. But it's also, let me tell you, that we all expected that the froth was on the market at 20,000, mainly in the mid caps. But lo and behold, mid caps are making new highs. So I think the folly of the market falling was much overdue. But it's just because of Reliance and HDFC Bank. Most of the other stocks which we own, PNB, Maruti, HCL Tech, Ora Hero, are all hitting new 52-week highs. So don't miss the woods for the trees. I think these last 2 days are an opportunity. This inquiry can be volatile tomorrow, but I think all the pain is in the prices now. So like you pointed out, there could be a little bit of froth on some of the IPOs, but who's to question that? The under ownership of equities is now coming to the fore, and people do want to get onto good stocks and good peer groups. I won't be able to comment on any of the IPOs, but I think there are a lot of pedigree stocks or peer management which are reasonably well priced, which can make money for the initial investor.
Well, SGX is indicating that we are down by 63 points, but that is something which is par for course. Bhasin Saab, SBI cards, the card business is growing at 30% for the industry, 40% for SBI cards, but the stock is down 1% this year. Why is this obvious bet on consumption being ignored by the market?
Yeah, good point. Good morning. So Nikunj, that's what we are trying to tell. When we've added SBI card in the last 3 years as a disclosure, we think the risk reward is very favorable. And there was a brokerage note which said that we'll go overweight Paytm and underweight SBI card. You cannot ignore the prevalence of credit card and the way they are expanding, and SBI card, particularly the way it's gaining market share at the cost of both HDFC and Axis. I think it's a no-brainer. So I'm very, very bullish on this stock. And I see actually 4 digits coming in this stock, maybe by the end of this year or maybe more. So there's a 30% upside easily on the card, and the earnings and the gain in market share is purely coincidental with that. Nikunj, there is a little bit of underperformance in select stocks, mainly due to the expiry and some of the correlated where people are switching into the fintech stocks. But you cannot have a country which is least penetrated by credit card not see growth over there, and these guys make money hands over fist. So SBI card top pick over there.
Okay, that's the take coming in on SBI Cards. Let's take stock of what was holding up in the market. Actually, nothing much. While, yes, there was an iShares which looked good. You did have some, sporadic action within some of the other F&O names as well. But not much was actually moving up in the market. Having said that, let's just take stock of not just the credit card spends, but maybe stories like Aditya Birla Capital as well. We just flagged off the Jefferies note for you, the fact that they've initiated coverage. It's a target of 215, and they believe that the company is poised to double the profits in the next 3 years. They say that they're going to capitalize on the wider network, the higher cross-sells as well. The NBFC can gain from the MSME lending opportunity as well. Sanjeev, I don't know if you're tracking Aditya Birla Capital. Would you have a view here?
Aisha, go back to 1 year back, and we were one of the first investors around that 110 rupee level. And we always felt that the business was humongous, but the opportunity lay in the price. The stock did nothing. And lo and behold, once you had a change of guard at the helm, and that lady from ICICI Bank came over and all guns firing. This has been a dream of a stock. So as a disclosure, we hold this, and we have no plans to sell this. We think this is one of the most underpriced NBFCs, and given the pedigree of the Birlas and the new helm with which this the new chairperson has taken over, this stock is definitely headed higher.
Okay, that's the view on AB Capital, but time to put the spotlight today on the stock that is on the editor's radar. And we're discussing Maruti, and interesting as well, just mapping out the overall valuation, where it stands compared to its 5-year average, and what the key growth drivers are with the festive season as well approaching.
Savan, okay, we look at the 5-year average, 28 times. But will the next 5 year be better than the last 5 years? What do you think?
With Maruti, yes.
Yeah. Because there was in the last 5 years, there was COVID.
Yeah.
See, please remember there was COVID, and then there was this huge disruptive force which was at play, which is that Maruti lost its mojo.
Was right.
See, Maruti lost its mojo because of SUV.
Yeah.
Mahindra and the Hyundais of the world, they came back and they really, and you know that what's happening in the SUV market now. So Maruti moved late, and they were never EV ready, and as a result the stock lost its mojo. But now they're gaining market share back in the SUV market. There is visible recovery, I think, in the tier 2 city, which is what I think we are talking about, that okay, this K-shape recovery is all great, but now the extremes of ultra luxury and ultra rural, I think, is also getting contracted. So you're seeing a mild recovery. Interest rates, when they go up in a jiffy, they act as a shock. But when they stay where they are, then the system accepts it. That's the new normal, like we say. So I think interest rate adjustment, I think that is over. You may argue back and say that right now the inventory levels what Maruti has stacked up, that is also a clear indication of how they see demand moving higher. So in the near term, there's a valuation comfort. There is a bit of a change in strategy in terms of the fact that they're acknowledging and admitting that we need to reboot our SUV market space now. And then sometimes I think this time around, because you have a delayed Diwali, and you will have a long festival season, I guess the impact of that really would be visible. So this impact of higher raw material prices, high interest rates, that macro challenge, I just get a sense is behind Maruti now.
Okay, so hopefully now the next few years should be better for Maruti, going by all of these key triggers, Aisha.
Okay, 10,556. Sanjeev, your take on Maruti. Should one be looking at adding positions or even buying afresh in their portfolios?
Aisha, it's so uncanny. You are asking all the stocks which I have covered, and I have been bullish on 8,000, 8,200. I was sticking my neck out that Maruti. By the way, my office is right next to their entry plant in Gurgaon. And, last year they sold 17, 18 lakh cars. This year they have an order book of 35 lakh cars. And I could make out by the sheer, language of the management that they are not bullish, but extremely bullish. And given that they've, adjusted to the new hybrid and the EV model which they are launching, Maruti may even cross 12,000 in this coming year. So yes, if you don't own it, and forget about the hogwash of high oil prices and XYZ, because the demand and the festive season all will add to that. Yes, that is a little bit of a headwind, but in the end, it's the mass sale which we are talking of and the adaptation to new models. So thumbs up to Maruti, and 12,000 definitely on the cards.
Okay. So but since I'm own Maruti, मतलब Maruti की गाड़ी है Maruti का stock?
नहीं, मारुति की गाड़ी नहीं है निकुंज जी, वो जब मैं काफी यंगर था तब थी। अब मेरे पे हाँ, मारुति का स्टॉक तो है मेरे पे, और मैं काफी सालों से होल्ड कर रहा हूँ, और अभी कोई इंटेंशन नहीं बेचने का। इस एज पे आप अच्छे शेयरों में रहना चाहते हैं।
Age kya sir? Buffett has made his killing in Apple after he turned 80. So in stock market, age is not a barrier.
Exactly, I'm 60, I feel like 30, and raring to go. So it's all in the mind. Nikunj, age is just a number.
What do you want to comment on? Maruti, age, stock of Maruti, the car you own?
I didn't get that.
No, I was asking Nuresh, since we're talking about age and we're talking about Maruti stock, they both are very close to Nuresh.
Both of the views are interesting. To be as emphatic as or as strong as Sanjeev ji on age being 60 to 30, and Maruti also, the stock has finally crossed 10,000 after 5 years. So hopefully the trends are changing here as well.
You know, Kunal, Maruti is not like this bombed out stock. It's a how much? Let's look at the YTD change. I think YTD change is in double digit.
Yeah, 25-26%.
25-26%. It's done reasonably well. So whatever superlatives me and Sanjeev are discussing, some would argue back and say that, okay, we know it. It's not that it's a bombed out stock. It's not like a contra buy.
It's not a contra buy, but it was an underperformer since last 2-3 years. And finally, I think this year, so far, the last 3-4 months specifically, the stock has seemingly found its mojo back. So, you know, it consolidated in a band of, I think, 2,000 points, approximately 7,000, 7,500 as a support broadly for Maruti for the last 3 to 4 years. So this seems to be more of a turnaround year for Maruti, and I would probably agree that this may not just be a short-lived rally for the stock price, because when you see such kind of a strong breakout after multi years of sideways correction, the stocks, they tend to start a new phase of rally for themselves. So would be bullish on Maruti, and on a gradual basis, I would probably expect 11,200 as an immediate target for the stock.
There is a buy report from CLSA on Tata Com, and they are talking about an outperforming rating. There is another report from Jefferies on HDFC Bank, and they're saying the obvious, that keep the faith, keep the faith, keep the faith. So, Nuresh, keep the faith, I think, is the word for HDFC Bank. The problem is that when you keep the faith and when you see rest of the market moving higher, and for those who have limited capital, they are feeling what could be called as FOMO when it comes to HDFC Bank, because you're not participating in any other stock.
So what has happened with HDFC Bank is now it has become a port of call for a lot of people who want to keep cash, or those who want to have a stock and be a little more defensive. And say the number of people recommending HDFC Bank has increased because there is a lot of faith on the stock. But what we've seen is when stocks go into sideways zones, the large cap ones, they go for multi-years as well. We've seen what happened with Reliance between 2010 to 2018. We saw 2013 to 2021 for ITC. And that's the reason where it is scary that how long does it stay in the range. And the point is whether you buy at 1500 or 1400, you want to be buying when the trends have changed. So I would rather wait it out for months together. But the fact is the stock has gone sideways for the last 2 years, 2.5 years. And a lot of correlations have broken. So this is the lowest price to book, etc., which used to never happen for the stock. Those are generally an indications of underperformance going forward. So we'll be more, say, skeptical in terms of the stock unless and until we start taking a price action which is very strong. So for now, it's a stock which could remain sideways for much longer than what we think.
HDFC Bank 1537. We discuss the stock perhaps on a daily basis. Kunal, stocks, defense stocks, power stocks, haven't discussed them in a while. Is the party over? Is the bull market over?
I would not say bull market is over, but that the fiercity of the trend is definitely slowed down for these stocks. So from a point when these stocks were up 20-30% in just a matter of 1 or 2 weeks, we've now seen that these stocks are down 20%, 25% broadly in the last 2 or 3 weeks from the point when these stocks topped out. And the bounces which is happening into the stocks, for example, the likes of REC, PFC, they are not seeing an extensive amount of volumes like what they had seen prior. So which means that the participation levels have definitely dropped down. Traders probably are using the mild bounce or the pickup of price action as maybe an opportunity to try and reduce their positions, or trying to cut back into the long stance into these names. So I would probably expect that this may just be a process for at least another 3 to 4 weeks, if not more, for these stocks. Because after such a kind of a steep rally into many of these names, you're bound to see a time-wise as well as a price-wise correction. As of now, we've seen price-wise correction kicking in, but the time-wise correction I think could probably play out for another 3 to 4 weeks. So I don't expect any extensive kind of a price action into these names. Yes, there would be those periodic bounces in between, but netted when we look at this from the August-September highs for these stocks, they could broadly correct by at least 25 to 30%.
One of the key movers yesterday in an otherwise quiet market was Dixon Tech. Let's just bring up the intraday chart from yesterday. Of course, there was a DAM capital note as well, initiating a buy on this one and setting the target price all the way to 6,000 rupees per share. They see further upside potential clearly from the current levels, and they're very, very bullish on this one. They're saying that the consumer durable goods market is extremely strong. With the festival season now approaching, they see pretty much a lot of traction, also strong traction of ramp up in mobile manufacturing, and thereby they were considering this buy. Also saying that the company is participating in the government's production-linked incentive scheme for IT hardware. That's the PLI schemes as well. So all in all, they're very, very bullish and upbeat about Dixon Tech. Sanjeev, what levels do you see on Dixon Tech in the near term?
So Aisha, let me make a disclosure. In the last 4-5 days, we've had some select clients who've done a sip in 5 stocks. Top amongst that is Dixon. And they are very, very bullish. Now, these are certain clients who are informed investors. So Dixon, Geo Finance, SRF, HDFC Bank, and SBI Cards. These 5 stocks, as a disclosure, we have been buying in the last 4-5 days, and we intend to buy for the next 10 days. Notwithstanding, I think Dixon has run up quite a bit. And now when you get this, news that there will be a little bit of a lag before it becomes a Make in India theme and so on. But I think this shift towards electric manufacturing, EMS, is very, very much there. And if you have a 1-2 year horizon, you can't go wrong. The promoters are the erstwhile Western Group, who had a pedigree, or who have a very good background in this till the TV franchise went out of fashion. But I think this is a stock worth investing. Only thing is, you will have to keep your horizon slightly longer, because a large part of the rally may have already been in the price. So the price may not be in your favor, but the business is surely in your favor.
Okay, fair enough. Stay with us. Lots more stocks to discuss. But in the meantime, we've got DMart Ready, which continues its dominance. It's actually retaining a competitive advantage compared to its peers. Let's understand what exactly is helping this performance. We've got Vinny, who tracks the sector closely and now joins in with the details. Vinny?
Good morning, and absolutely what we're seeing is that DMart Ready is actually managing to sustain in terms of the competition, and they have a big competitive advantage whether you compare it to a Big Basket or a JioMart. Now, the gap between DMart Ready as well as Big Basket has increase in terms for most of the products in the month of August versus when they had compared in the previous couple of months in the beginning of 2023. Now, DMart continues to remain the most competitive in terms of a non-quick commerce segment, and that is led by increase in price gap between DMart Ready as well as its competition. Now, this is what Prabhudas Leela is highlighting. That carried out a channel check which is suggesting all this as well. Now, in terms of specific segments, also when you look at it, loose groceries, that's seen a bit of an inflationary pressure which is more visible when you compare it in terms of Big Basket versus a DMart Ready or a JioMart as well. Other than that, dairy prices, they have remained quite stable. Mixed trends in terms of the price gap that is seen. Personal and hygiene care segment, they are seeing that Big Basket has seen a significant gap increase versus DMart Ready, and JioMart has gave a 5% off in terms of the discounts or offers that were there. They give a 5% off in terms of the bill value, which is higher than for products that they purchase, higher than 1,500 crores in terms of groceries, as well as while they had a discount offer of 10% in terms of cards for selective banks as well. While in terms of DMart Ready, they had only given some offers during the Independence Day. So that is how the retail space is shaping up. Surely DMart Ready seems to be at an advantage compared to its peers.
So thanks very much for giving us those details. Sanjeev, just curious as to where you stand within this space. Avenue Supermarts, do you believe that the game is looking strong for this stock?
Yes, I think it has been a very, very big market gainer. But, Avan, the stock has done nothing much. We own Trent, and we think that their, gain as far as Chroma and other brands has been far more under published than actual achievement. And DMart, for any reason, has been an underperformer for stock. So we continue to remain with Trent. Like we said, we've added Geo Finance. We think that as a proxy, and why not Reliance? I think Reliance itself will see the record sales as far as retail goes now in the coming festive season. Distill exports from Russia have actually almost stopped, which means distillate O2C chemicals will see a very big gain for Reliance in the coming few quarters. And I think at this price, Reliance fits the bill perfectly to buy a retail come OTC business with Geo again. Now a price hike on the on the telecoms also being on the card. So I would be more bullish on Trent and Reliance. DMart may be a very good business and market share, but the stock is underperformed for some time.
Yeah, that it surely has, right? I mean, it's one of those HDFC Bank kind of revered names which has clearly underperformed. 36.32. Kunal, the historical charts on Avenue Supermarts and what you now foresee going forward to?
So yeah, the stock had underperformed for last 2 years. From 5,000 odd levels, it had corrected to 3,000 odd mark, 3,200 odd levels. But then I think the recent recovery is also indicative that this 2 years of glut in the stock price where it corrected very sharply after that steep run the stock had seen post IPO, I think that mean reversion has happened. So both time-wise and price-wise corrections have happened for DMart. It's confirmed a breakout above its 200-day moving average in this recent leg of rally, which the stock had not shown in the last many months prior to that. So that also is an indication of a possible change of trend for DMart. I would be extremely bullish on the stock, and my expectation is that hopefully in the next 12 to 18 months, the stock should surpass the previous size of 5,000 plus.
Okay. Not in for a great start, but let's look at the global setup here. And why it is important is that if you frankly look at Indian markets at 20,000, we did not even touch 20,000, 21,000. So from 20,000 to now, it's not been even a 3%, 3.5% reversal. But at the same time, Nasdaq in the month of September down 7%, Dow down 4%, S&P down 5%. Now these are serious reversals. We're just not talking about it because you're not feeling the heat right now. But the bottom line here is that India is outperforming. We did that for 2022 and we are again doing that in 2023. Yes, when global markets they get jammed and when there is a linear downturn in the global market, you will hit a pause button and then markets will consolidate. So the next trigger could be earnings season. The next trigger could be something from the monetary policy, update on the festival season. But this market is not going to be sinking into a deep correction even though global markets have reversed. So global markets, they act as a tailwind and adds to the market momentum. When global markets are bad, because what the positioning of the Indian economy is and what the underlying current of valuation is, that headwind will not be very nasty. It's not going to sweep you away. So yes, don't make a bearish view just because global markets are down. But you got to be careful when you buy and how you buy. We'll talk about it. But in general, the mood point right now seems to be, oh, Nasdaq is down 7%. Will a deep correction in Indian market started? No, sir. I don't think that's going to happen. We've seen that in 2023 as well. There you go. Look at Nifty. We are handsomely outperforming this global fall. And that's the truism, Nuresh, isn't it?
That's the fact. And if you look at US markets, they've been sideways. And even if you look at the index, it gets beyond the index, the small cap indices in US are at much more lower levels. It's just the top heavyweights doing better over there. Otherwise, the market has been in a much deeper correction. So the outperformance is very clear in Indian indices. And this is not the first time. We've seen those phases multiple times, whether it was a few years back in 2015-17 or in 2004-7. So right now, the viewers go with the price action. The drift is there in Indian indices, but it does not look like we are going into much deeper correction. We've corrected from 20,200. The cases we go worst case towards 19,200, 300. It's only when we start breaking that we change the view. So for now, the bias is positive. Broader market action is positive. Corrections are part of the longer term trend and the longer term trend is up.
Okay, that's on the trend that we're seeing in the markets right now. Let's move away from the listed universe. And Zerodha posted a very impressive fiscal year 2023 results with revenues surging 38% all the way to almost touching 6,900 crore rupees. Their profits also have jumped up a good 39%. Let me take it across to Sharad and get in more details about where exactly are they seeing the growth. Sharad?
Well, yes, a strong set of numbers coming in for FY23, and Zerodha has reported its financial. They've stated almost a 38% jump coming in the revenues of almost 6,875 crore rupees. And also looking at the PAT, the numbers have gone up by almost 40%, coming in at almost 2,900 crore rupees. Now, the important statement coming in from the management, Nitin Kamath, CEO at Zerodha, he had stated a very cautious tone coming in. He said that there was a phenomenal growth seen in the years FY22 and FY23, but that said, the business has plateaued in terms of revenue and profitability in this current financial year up till now. Now, this was stated in the blog post itself. So there is a cautious commentary coming in, but overall the numbers were actually impacted because of a higher F&O flow numbers, and this is the largest retail focus brokers and have the asset base of roughly 3 lakh crore rupees. Now, the bulk of revenue coming from the F&O segment, and if you look at another set of numbers, is they have roughly 63 lakh active clients in the month of August, and the management had stated that roughly they are adding 2.5 lakh new clients each month.
Right, we'll leave it at that, Sharad. Thanks for highlighting what Zerodha, only wish it was listed. But yeah, phenomenal numbers coming in there. Sanjeev, reminds me so much, new paper hitting the markets. Any of the recent IPOs that you've, recommended and subscribe on? And, in particular, I wanted your take on JSW Infra too.
So, Aisha, I cannot comment on the new issues since our secondary market team is a co-manager to some of them, so it's not in compliance. But I'd just like to stress on one point which Nikunj made, that the Nasdaq is down 7 or 9%. Actually, it's Apple, 198, which is down to 174. And just like Reliance and HDFC have so much of weight, Apple on the index has a lot of weight. So yes, the pain is there on the Nasdaq, but it's large to do with 2-3 large cap stocks like Apple and a Microsoft. Similarly, in India, can you believe last week we had 500 million inflows into HDFC Bank, which took it to 1670, and this week you've seen 500 million outflow. So I think the best play is buy HDFC Bank at 1535 and next week sell it at 1650.
Right. Okay, just to highlight for our viewers, lots happening in the primary market. You've got JSW Infra, Data Services. They're going to be closing for subscription today. JSW Infra, by the way, the total subscription figure stands at 2.1 times. And for Data Services, it's 0.16 times. You've got two listings as well today. You've got Sai Silks, which got a total subscription of 4.5 times. You've got Signature Global as well, which is listing today. Total subscription was 12.5 times. And then you've got Valiant Laboratories, which is an IPO size of 152 crore rupees, so smaller in that sense. And the price band has been set at 133 to 140. That is going to be opening today for subscription. So lots of primary market activity coming your way. That said, let's just take stock of what else is going to be, in focus this morning. We flagged off SBI cards and how the credit card numbers have actually jumped up on a month-on-month basis. Eicher Motors, wherein Jefferies maintains their buy, they've hiked the target price to now 4150 from the earlier 4000. That was one stock which was very, very active in trade yesterday as well. Kunal, you think from Tata Motors the focus is now shift to Eicher and maybe that's the stock of the month within Motown?
Not really. I don't believe so. Maybe it could happen, but I'm not sure that whether the charts are actually deciphering that, because the momentum for Eicher Motors is just not there. So you look at the last 2-3 months of price action, and I think especially from the month of June or July, June second half or July first half, when the stock had shown a very sharp sell-off from 3,750, 700 levels to 3,200 in just a matter of I think 1 or 2 weeks. Post that, what we've seen is just mild pickup of price action for Eicher Motors. We call that as maybe a mild bounce after a sharp correction or a retracement of sorts. But then, the stock has to surpass those previous levels of 3,700 to find its mojo back. So for example, just like what we discussed for Maruti, the stock took many quarters and many years to try and make a comeback. So I think we'll have to wait out for that to happen for Eicher Motors. I would still not be extremely bullish on the stock price and would probably consider this as just a mild bounce in the entire process of the stock consolidating.
Sanjeev, one last question before we let you go. The most actively traded pocket of late seems to be mid-cap cement, right? Look at the moves on a Dalmia Bharat or a Ramco for the last 2 days at least. You think it's worthy of investment?
Yes, Aisha, and people are missing the woods for the trees. Like I said, Ultratech is close to new highs. I think Ambuja and ACC, ignore the rest. Ambuja ACC fit the bill perfectly. 58 million tons of capacity, and Adani is looking to invest more in the next 3-5 years. And cement makers will be laughing their way, given that construction activity, whether roads, ports, houses, is at its highest. So I think cement is a no-brainer. And I would be very, very bullish on ACC Ambuja. By the way, Aisha, I should be with you in next week on the 3rd of morning. And let me clarify, I think that next week we are headed for. So tea on Tuesday morning with you, and looking forward to 20,000 in the coming week.
Done deal. And we've got the RBI policy as well next week, by the way. The 2-day policy from October 4th to 6th. So yes, it will be quite an action-packed next week, and truncated one as well as that. Good to have you on the show, Sanjeev, as always. Let's get in some trading ideas on that note from the mid-cap universe then. Naresh, what's on your list?
So that would be a buy on care ratings. The stock has been slowly and steadily making an uptrend. Made a new 52-week high yesterday. A lot of relative strength has not corrected in the last correction in the whole market as well as in the small cap indices. Strong trends here could be headed towards 1,000 plus short-term stop loss at 850.
Find out what the other mid-cap trading strategies are. And Kunal, what's on your radar this morning?
So I'll go with the buy on Bombay Dyeing. The stock has retraced from 165 to 140 odd levels. It's trying to stabilize. The fall is stabilized for the stock at current levels. There are some good pickup of price volume action for Bombay Dyeing. The indicators are starting to get into a reversal or breakout mode. So would expect the stock to show signs of momentum going forward. 160 as a near-term target. Stop us at 137.
All right, there you have it. Those are some of your top mid-cap strategies that our chartists are flagging off. But also want to take note then of some of the interesting movers that we've seen in the week gone by. And on the Nifty 500, names like a Vaibhav Global, for instance, if I'm not mistaken, have had a fairly decent week. But just looking at the monthly change, actually, let's pull up for a Praj Industries. That's been double-digit gains. You've also seen some like an e-clerks as well that has gained about 10% or so. Heikel has been on the gaining radar. Getting a view then, Naresh, on the charts of Praj Industries. Have you had a look at a Vaibhav Global even or an e-clerks services?
So I look at Praj Industries and Vaibhav Global. So Praj has finally got into an uptrend after almost consolidating for the last 2 years. The stock had rallied back in 2021 to 400. And then over the last 2 years, multiple times it went to 450 and corrected back to 300. 450 got crossed, and now we've gone into a long-term uptrend yet again after the 2020 move. Going forward, any dips back to 500, 550 band is still a buy. The consolidation for 2 years actually gives us a target price of closer to 700, 750 in the short term. So a buy on dips, the stock looks very promising. Vaibhav Global is interesting because the stock has given a good enough bottoming out formation. The stock corrected from 1050 back to 300 levels. Spent almost 12 months around this area, 300 to 400 zones, and now is starting up for a trend. Would have a strict stop loss at 420 and a buy at current levels.
Right. Okay, IRCTC, that's on the cover this morning. Let me take it across to Sharad and find out what's the buzz all about. Sharad?
Well, yes, the company has proposed to the Ministry of Railways for a price hike for Rail Neer. Now, Rail Neer is the packaged mineral water drinking coming from IRCTC. Now, do remember the last hike in prices for Rail Neer was in the year 2012. That is almost more than 10 years ago. Last time the price hike, the numbers for per litre bottle of Rail Neer was actually increased from rupees 12 to rupees 15. Also, the company had stated that the proposed price hike is due to the increase in the logistics cost as well as inflation coming in. The company is setting up roughly 4 plants for Rail Neer, out of which 3 are expected to be operational this year itself, and 1 would be coming in next year. Also, if you look at the overall capacity for IRCT's current operations, 16 Rail Neer plants are there totally, and the installed production capacity is roughly 1.55 million per annum. Also, if you look at the IRCTC, the expectations going ahead, they are expected to increase their production capacity to almost 1.85 million litres per day in FY25.
Thanks very much for giving us that snapshot, Sharad, on IRCTC price hike for Rail Neer. All right, let's move on then and keep you abreast with all of the other top headlines across the world. And in a set back to the former US President Donald Trump, the New York judge has found him liable for fraud. Trump allegedly provided false financial statements for roughly a decade, deceived banks and insurers by massively overvaluing assets and exaggerating his net worth, according to a judge. Meantime, the Federal Trade Commission in 17 U.S. states have sued Amazon, alleging that the e-commerce giant was unlawfully dominating broad sections of online retail by inflating prices and overcharging sellers in a bid to stifle competition. And placing the spotlight on the gaming industry, the world's favorite game, Candy Crush Saga, that's hit $20 billion in revenues since its launch in the year 2012. Candy Crush has been the top-grossing franchise in the US app stores for the last 6 years on the trot. And India continues to win big at the Asian Games. In the latest, the Indian trio of Manu Bhakar, Esha Singh and Rhythm Sangwan have won the gold medal in the women's 25-meter pistol team event, while for the first time, we've also bagged the top spot in the equestrian event. And staying with sport, India will be taking on Australia in the third and final ODI of the third 3-match series today. With a 2-0 lead, the men in blue look to achieve a historic whitewash against the mighty Australians, even as 5 key Indian players will not be playing. All right, and let's get right back to the stock markets. We've got Maruti, which is on the editor's radar. Lots of key triggers down the line, especially the festive season. Let's find out what Nikunj's take is. Listen in.
We look at the 5-year average 28 times. But will the next 5 year be better than the last 5 years? What do you think?
With Maruti, yes.
Yeah. Because there was the last 5 years.
Growth drivers,
there was COVID.
Yeah.
See, please remember there was COVID, and then there was this huge disruptive force which was at play, which is that Maruti lost
my
its
answer
mojo.
was right.
See, Maruti lost its mojo because of SUV.
Yeah.
Mahindra and Mahindra and the Hyundais of the world, they came back and they really, and you know that what's happening in the SUV market now. So Maruti moved late and they were never EV ready, and as a result the stock lost its mojo. But now they're gaining market share back in the SUV market. There is visible recovery, I think, in the tier 2 city, which is what I think we are talking about, that okay, this K-shape recovery is all great, but now the extremes of ultra luxury and ultra rural, I think, is also getting contracted. So you're seeing a mild recovery. Interest rates, when they go up in a jiffy, they act as a shock. But when they stay where they are, then the system accepts it. You know, that's the new normal, like we say. So I think interest rate adjustment, I think that is over. You may argue back and say that right now the inventory levels what Maruti has stacked up, that is also a clear indication of how they see demand moving higher. So in the near term, there's a valuation comfort. There is a bit of a change in strategy in terms of the fact that they're acknowledging and admitting that we need to reboot our SUV market space now. And then sometimes I think this time around, because you have a delayed Diwali and you will have a long festival season, I guess the impact of that really would be visible. So this impact of higher raw material prices, high interest rates, that macro challenge, I just get a sense is behind Maruti.
All right, that's a view coming in on Maruti. But let's move on then and tell you about the index strategies. Here's what our chartists are advocating. No trade from both Naresh and Kunal, and Santosh has got an avoid. Let's find out what their view is on the Nifty Bank Index as well. Owing to the recent underperformance, it's no trade from both Naresh and Kunal and avoid. So pretty much the same stance coming in from all three of our chartists.
Naresh, what should one do with Delta Corp? Buy this fierce decline, because if things move, it could really pop right back up?
So the stock has gone through this phase so many times that everyone has given up. There's no point looking at it. Once there is more clarity on the issue rather than just the price. Over the last few years, we've seen this happen. This is the second gap down in the last 3 months. So the stock used to be 240, became 180, then consolidated here, and now we are at 30. So the prices are back to where it was in back in 2015, and even the top in 2010 was around 130. So the whole last 10 years have been washed out. So would not try to get in here. There are relatively better choices available in the market. Not necessary to be contra here.
Naresh, other stock which has done very well for itself is JSW Energy. Last 1 week change, both in relative terms and absolute terms, it has managed to outperform. Last 1 week change is about 14%.
So the stock looks very promising for the fact that it's gone through this correction also. The stock had outperformed in 2020-21. It went up from 60-80 levels to 400 and then corrected all the way to 220 in 2022-23, couple of times. Now we are back above that 400 mark, which is the high of 2021. So that clearly indicates it's a fresh start and a fresh new trend. Very similar to what happened with Tata Power, but Tata Power is yet to cross back those 2021 highs. But clearly the power sector as such across the board is looking very promising. So JSW Energy has seen very large volumes in this breakout from 300 to 420. So one can now have a trailing stop loss at 400 and even a fresh buy at current levels with a stop loss at 400.
All right, just about a minute and a half to go. I wanted to get in a quick chart check from you, Kunal, on Delta Corp, which has seen a battering of late.
Yeah, I think, even, the point when the stock had fallen down to, I think, 180, 190 mark a couple of months back, even at that point, we, managed to avoid the stock because there was no point looking at the charts when it's going through a sharp correction, especially after such a kind of a gap down, because even minor bounces could probably be taken as an opportunity to try and exit positions or cut back, the long positions for the stock. I would probably expect very similar kind of a stance this time around as well, even though the volumes have jumped up significantly higher for Delta Corp in the last 2 days of sell-off. But because of the gap which has been created, the stock price, it would probably take a lot of time for the stock to try and make a comeback, close that gap for itself. So I would probably believe that at least for the next 1 or 2 quarters, the stock may remain into this downward trend or a sideways range. So no major trades initiated on Delta Corp.
50 seconds to go, and I just want to put this data out of what Indian markets have done versus what the global market setup has been. Global markets, and especially NASDAQ, which is the performing index of this year, whether it is Apple or Microsoft, doesn't matter. What matters is that NASDAQ is down 1,000 points from the recent high, 7%, and Dow's down 4%, and S&P is down 5.5%. Now flip it around with India, small cap, mid cap, the bank Nifty, and what do we have there in terms of the setup? Now that's the Nifty range. That's the Nifty range, how it has moved in the month of September. But Indian markets, in a sense, have not really, they've really not fallen flat, and they've managed to outperform all, which is what really is important point I just want to bring out. First rates, any second now will just come up on your screen. And there we go. First rates, I'll let the screen do all the talking here right now. And the first rates are 28 points down for the Nifty. We are starting with a positive market breadth. It's pretty much even Steven, and you've got a lot of green actually in real estate, a lot of green in pharmaceutical. There is a lot of green across the board, if I may say so, in terms of where directionally the market breadth is moving. Now, what are the big news makers? Yes Bank up 0.5%. You've got not too many newsmakers actually. Let's look at Maruti and Aditya Birla Capital, because those are two stocks where brokerages have really initiated a buy. HDFC Bank, big volume there, but no big change in price action. HDFC TCS, big volume there, no change in price action. Cochin Shipyard, volume there, but again no price action. ABB, volume there, no price action. Very few names are really, popping up in terms of any steep appreciation. Century Textile, news driven, and then there is a constructive price action once again in Jupiter Wagons, which has got to do with railway and wagon manufacturing.
Okay, a couple of other names which are in focus then this morning. Let's see what SBI Cards is up to. Remember, we just flagged off the total spends for credit cards has grown nearly about 3% month on month, versus 2.7% month-on-month for the sector. SBI Cards holds up 1% as we speak right now. Century Textiles, wherein Birla Trimaya Phase 1, 100% has been sold out within a span of just 36 hours. That stock gaps up 3.25% as we speak right now. Aditya Birla Capital, wherein Jefferies has initiated a buy, target price of 215. Eicher Motors, active stock from yesterday. Jefferies maintained a buy, hiked the target price to 41.50. Marginal follow through on that stock. They signed as well, wherein Morgan Stanley has upgraded the stock now to an overweight, up the target price to 2,000 rupees from the earlier 1550. And then Shyam Metalics as well, which has announced its entry into energy storage sector. That stock should be seeing a move 0.5% higher as we speak right now. Suzlon, Dilip Shanghvi and Associates have terminated the Feb 2020 shareholders agreement. That stock is down 2.5% right now. And then Tech Mahindra, wherein Morgan Stanley has downgraded the stock now to an underweight and has hiked the target price, however, to 12.10 from the earlier 1,060. So these are a couple of stocks which are in focus this morning. Besides that, I just want to revisit what Voltamp as well is up to, wherein the promoters are looking to sell a 12% stake at 46.33 via a block. This happened yesterday, wherein Oxbow and Kotak Mutual Fund have been buyers here. There's also, Borosil Renewables, that also has, quashed the Bombay High Court tax demand notice. So this is one stock that you may want to look out for. There's M as well. News just came out that MSPL and 20L are looking to sell the Sustainable Energy Infra Trust units up to about 900 crore rupees by an OFS, flat for M&M as we speak right now. And then Adani Ports as well, which has commenced the cash tender offer to buy back about $195 million of 2024 bonds. These are a couple of stocks which are in focus. There's, by the way, Pratap Snacks as well, wherein the GST authorities have conducted a search and seizure at their manufacturing units in Bangalore. So these are a couple of stocks which are on our radar. But pretty much a no-go for the index. It started off very quiet. 19,629 is where we're currently at. Idea, Dixon, Colgate, these were your big movers yesterday. So just want to revisit some of these names. Today, of course, it's all about Individuals Housing. Cipla, which is holding up 1%. Manappuram is looking good by about 1%. Granules is up 1.25%. And AV Capital is your biggest mover with that 1.7% move. By the way, you may also want to look out for Vedanta. That's gapped down this morning. There's a Moody's downgrade of the corporate family ratings on Vedanta Resources. That stock is down 4.5% on the futures, 4% lower on the spot market. Kunal, what trades look interesting?
So yeah, MCX is the stock which I would look to trade in the open. That's a very attractive chart. 2 days back, we'd seen a price volume breakout, and now the stock is back towards that 1900 level. So attractive risk reward to enter the stock at current levels.
Right, Naresh, what about your first trades?
So it matches the same one, MCX, one of the few stocks which has given a good breakout and holding on in the last 2 sessions.
All right, there you have it. That's MCX. It clearly seems to be a consensus buy from both of our chartists.